What is up? Welcome back to episode 7 of AJ Academy. Today I'm going to be going over how to utilize high time frames and how to find your daily bias. So our daily bias is essentially going to be found by utilizing the higher time frame, seeing what high time frame PD rays are being respected in the moment, where is structure leaning towards bullish slash bearish, and are we in an uptrend or a downtrend. So the way I trade continuation based models, meaning I will only trade with the trend. If I am bullish, I will only go for longs. If I am bearish, I will only be looking for shorts. Meaning, to look for longs, we have to be in an uptrend, and to look for shorts, we have to be in a downtrend. It is that simple. But finding daily bias is not that simple, and I'm sure a lot of you guys struggle with it because a lot of my students themselves also tend to struggle a lot with it. So, here's how you're going to find daily bias. Essentially, you're going to start on the daily or weekly time frame. Usually, you're going to be on the daily time frame, and you're going to see, but for now, I'm going to show you guys an example of a more scaled out kind of model, right? So we see on the weekly time frame, what do we see? A structured bullish or bearish. We are in a clear downtrend right now. The market is clearly bearish. We inversed all these bullish fair value gaps. We disrespected all these bullish order blocks, telling us that price clearly is not respecting any bullish PD rays. So what are we doing? We are respecting bearish PD rays. Let's look at the weekly time frame. What do we see? It is a weekly fair value gaps, right? What is the first thing I told you guys? What high time frame PD rays are being respected? We are respecting a weekly bearish fair value gap. Let's go back into the daily time frame. Right? We are in a clear downtrend. What is this? Downtrend. Right? Clear downtrend. Right? So we're in a downtrend. Price is respecting a bearish weekly fair value gap. What do we see on the daily? Nothing. We have nothing rejecting on the daily. Let's hop down to the 4 hour. What do we see? Right? We have a bearish 4 hour fair value gap. Right? What does price do? Taps into the bearish fair value gap right here. This candle taps into it, right? What do we see happen here? Let me go back in time because we already kind of swept everything. But if we look here, at this point in time, what do we have? We're rejecting a weekly fair value gap. We create a 4 hour fair value gap. We tap into that 4 hour. Let's hop down to the 1 hour. What can we see on the 1 hour, guys? We see a bullish fair value gap. What does it do? It gets disrespected. So the way you find daily bias is you essentially combine all the concepts I've taught you throughout the last few episodes, and you are going to apply them on the higher time frame. Meaning you are going to start on the weekly. You're going to go down to the daily, then the 4 hour, then the 1 hour, then the 15 minute, then the 5 minute. You're going to go down from weekly to 5 minute, all right? Here are my time frames. Here are the time frames I use. Yeah, my face isn't covering it because a lot of you guys were saying to move my face onto this side so you guys can see the time frames. Copy the time frames I use. The way you're going to find that is you're going to go in Trading View, click this little drop down, and favorite them. There's going to be a star next to the time frame, see? You're going to favor the 1, 2, 3, 5, 10, 15, or not 10, sorry. 1, 2, 3, 4, 1, 2, 3, 5, 15, 1 hour, 4 hour, daily, and weekly. I don't use the monthly. I've never used the monthly in my life. Ignore that. It's just so I can see the month if I want to. But, all right, let's look at this time frame, right? On the weekly, we're rejecting a weekly fair value gap. So let's practice again. How you find daily bias and how we use time frames. This is 2 videos in 1 video, all right? You start on the highest time frame possible, the weekly. See, what are we rejecting? Weekly fair value gap. Then we go down to the daily. What are we? We're in a downtrend. Structure still bearish, all right? Go on the 4 hour. What can we see? We have a bearish 4 hour fair value gap that price is rejecting. And yes, right now we are reversing back into it, but that is simply because, oh, okay, yeah, my trading is broken. That's only because, what's it called? We already took out all the sell side, so price definitely just wants to have a little retracement. All right, hop down to the 1 hour. You can see price taps into a weekly, creates a bearish 4 hour fair value gap. What does price do? Pushes back into it and respects it. We have all this sell side. Remember I taught you guys buy side and sell side liquidity? We have all this sell side resting below us. What is price going to want to do? It's going to want to take them out because there's a lot of buyers in the market going long right here. And the banks want a better fill. So the banks are going to move price all the way down here so everybody gets stopped out. All right. What bullish confluences do you guys see in this leg? There's a bullish 1 hour fair value gap, right? Because I'm on the hourly time frame. What does price do? Closes below it, giving us confirmation that price is not ready to move higher. It wants to move lower, meaning it wants to take out these lows. Now let's go to the 15-minute. What do we see on the 15-minute time frame? I see a bearish 15-minute fair value gap right here. Right, this is what I see. I see a bearish 15-minute fair value gap. All right. What does price do? It taps into it. Am I on the right? Yeah. Oh, I'm too early in time. Hold up. Let me skip forward a bit. Because we did create another 15-minute. This is not the one I was talking about. All right, let's see it. Right here. So we create a 15-minute. We reject the 15-minute. We did not inverse it, actually. And then we created another bearish 15-minute here that price taps into and respects. Because this is too early in the day to look for a trade. This is still like 5 a.m. to 7 a.m. I thought I was on the wrong time. All right. So there was news at 8:30. So we were looking to trade that, right? What does price do? Create a 15-minute bearish fair value gap here as well. So respecting that 4 hour, we inverse a bullish 1 hour telling us price wants to push lower. But what do we want? We actually want more confirmation. So we have a bearish 15-minute here that price taps into, pushes lower. We end up creating another bearish 15-minute, right? Price taps into it. Now let's go on the lower time frame. We can start at the 5-minute, right? You guys want on the 5-minute, it's a good time frame to use. What to do? We just created a bullish 5-minute fair value gap. So we can just wait for price to inverse that and then enter off that if we want to. That'd be a great entry. Boom, inversed it. We'd enter short there, right? Just like that. It's literally that simple. Targeting these lows. All right, and as you can see, it's going to play out like that. I actually kept dumping too. But that is how we find daily buys. That was a little entry off a 5-minute inverse fair value gap, right? Because if we are bearish, like I said, we want to see bullish confluences get disrespected. Like I said, I'm bearish on the day, right? Because we tapped into the 4 hour and we're respecting a weekly. So what do I want to see? I want to see the bullish 1 hour get disrespected. And what did it do? It got disrespected. What happened here? We had a bullish 15-minute fair value gap here as well. It got disrespected. Bearish 15-minute respected. Bearish 15-minute respected. So we are respecting bearish PD arrays while disrespecting bullish PD arrays, right? And then what happens after we take out all this sell side liquidity? Market pushes up. It probably wants to retrace, right? That is okay because we do not trade reversals. This is a reversal in the market. We trade continuations, meaning we would trade till this low and then we'd call it a day. I personally took this trade this morning up here. We had a 1 minute inverse fair value gap. Like I said, we had all this sell side resting below us. We ended up sweeping this high inside of a 15-minute fair value gap, right? Bearish 15-minute sweep internal high. So liquidity sweep, fair value gap, rejecting a higher time frame fair value gap. What do we have? A 1 minute bullish fair value gap. Like I said, I want to see price disrespected. I mean, this actually inversed it. I drew this out wrong. Hold up. There we go. So this candle here closed below the fair value gap. That's when I entered in short. Stops at the high. And my take profits were around here, right? This low. Take profits here, etc. These were the draws on liquidity. These are lows in the markets that you want to see get swept. All of these are very important lows in the markets. You can just see why are they important, because just look at them. They're all swing lows. This is where people's stop losses are. These are the pivots in the market. See, there's the lows before we make a retracement to the upside, right? And tomorrow you'll most likely be targeting these lows as well, right? Because this is liquidity in the market. These are stops waiting to be filled. This is my trade today. That's kind of how I trade, how I taught you guys to find daily buys. That's why I was bearish, right? Rejecting higher time frame bearish PD arrays and disrespecting higher time frame bullish PD arrays. If I wanted to be bullish, I want to see price disrespect Right, let me write this down for you guys. That's kind of how you find your daily bias, right? You want to see price, respect, high time frame PD arrays, and the overall structure of the market. So if we are in an uptrend, downtrend, if we are in an uptrend, you want to see price, respect, bullish 1 hour, 4 hour order blocks, fair value gaps, CISDs, and disrespect, bearish order blocks, CISDs, fair value gaps. If you are bearish, you want to see price, respect, bearish, high time frame, fair value gaps, order blocks, and disrespect, high time frame, bullish, fair value gaps, and order blocks. You guys get what I'm saying? So if we are bullish, price respects high time frame. High time frame means 1 hour to, usually I use 1 hour and 4 hour for daily bias, but in some situations you use daily and weekly. So if we are bullish, you want to see price respect high time frame, 1 hour, 4 hour, daily, and weekly. Confluences. What are the confluences that I've taught you? Confluences, meaning fair value gaps, order blocks. I taught you fair value gaps, order blocks, CISDs, IFEGs, etc. Right? These are the main ones I use. Right? This is really all you need to know. If we are bearish, price respects hold up. Same thing goes for bearish. Respects high time frame, 1 hour, 4 hour, daily, and weekly confluences. Except if we are bearish, you want to see price respect bearish PD arrays. If we're bullish, you want to see price respect bullish PD arrays, right? Why is this not? It's not even fitting in my screen. What the fuck? Price respects that and disrespects bullish fair value gaps. When I say order flow, I just mean structure. So if we are in a high time frame downtrend, meaning the hourly and 4 hour are trending downwards, and let's say the 5 minute is like it's going up. You see the 5 minute and you think, oh, we're bullish because the lower time frame is reversing, which you could have said that today, right? When I entered short. Here, right? The lower time frame, because I entered short up here, right? All right, yeah, my trading view just broke. The fuck just happened? I entered short basically up here, right? Some people would see the 1 minute and would think price is reversing because yes, the 1 minute right now is bullish. We are in an uptrend. You want to see price disrespect lower time frames order flow. So if we are in a higher time frame downtrend, right? We are in a 4 hour, daily, weekly, 15-minute downtrend. But the 1, 2, 3, and 5 minute are bullish. First of all, higher time frames hold higher power and higher value, meaning we don't give a shit about the lower time frame if the higher time frame is bearish or bullish, right? But we see bullish order flow, right? We see a fair value gap. This is an example of bullish order flow. This is a bullish confluence. We want to see price disrespect bullish order flow. So what do? I wait. Oh, all right. I mean, that just skipped like 30 minutes ahead, but yeah. I wait for the fair value gap to get disrespected. And then when you see that bullish order flow is not being respected, you enter short. And you see all these draws slowly getting taken out. All right, yeah, my replay mode's like broken. Fuck this. But you guys should understand what I'm saying by now. Right? So if we are bullish, you want to see price respect high time frame, bullish fair value gaps, order blocks, CISDs, etc. And you want to see a disrespect bearish order flow. I just gave you a bearish example. There's no bullish examples as of right now because we've been in a large downtrend. So disrespect bullish order flow, order blocks, CISDs, etc. Right? Whatever confluences you guys learn. I don't teach fibs. I don't teach equilibrium. I don't trade that way. But if you are someone that is learning from other mentors, other teachers, and they teach you other confluences, this still applies to those confluences. This will apply to any confluence you learn, because it's just the concept of disrespecting bullish confluences and respecting bearish, and the confluence, or the concept of disrespecting bearish and respecting bullish if we are bullish. You don't want to just see price respect bullish if we're bullish. You want to see price, you want double confirmation. You want to see price respect a 1 hour bullish fair value gap while disrespecting a bearish 15-minute fair value gap. So if we are bullish, you want to see price, let's just say an example. You tap into a bullish 4 hour fair value gap and there's a bearish 15-minute fair value gap in the leg. You want to see price disrespect it. That gives you more confirmation to go long, right? Because if price didn't disrespect it, it could honestly respect it and go short at any time. We always need double confirmation, right? And disrespect bearish order flow, confluences. So we always want double, kind of a double confirmation, right? So high time frame PD arrays are being respected while opposing PD arrays are being disrespected, right? Always trade with the trend. If we are bearish on the higher time frame, please look for shorts, don't look for longs. And sometimes you will win. Like, I'm gonna give you a perfect example today, actually, right? We took out all these levels of sell side. There's nothing else for price left to take. So the market just reverses. When there's nothing left for the market to take, the market will tend to reverse. And you will make a lot of money. You will make a high return on your original risk. This is a 1 to 8 RR. If you held all the way, realistically, you probably would have held to here or here, which is still like a 1 to 5, 1 to 6 great trade, right? Except for the fact that reversals are more likely not to happen than to happen, right? You will fail most of the time you are trying to trade a reversal. You are more likely to succeed trading continuation patterns, because that is how the market moves. The market moves in trends. So trade with the trend, because the trend is always going to be your friend. As corny as it fucking sounds, it's true. It's going to help you in the long run. Yeah, so trade I took today. And a lot of you are asking me, how do you use higher time frames, or how do you use time frames in general? This is kind of a 1 minute explanation. I'm just going to throw in with daily bias, because I kind of just taught you guys how to use it as well. So you're going to start at the daily, obviously, and you're going to see what PD arrays are being respected, right? Or in the weekly or daily, either one, what PD arrays are being respected. Then 4 hour, what PD arrays are being respected. 1 hour, draw out every fucking confluence you can see on the higher time frame that is in line with your trading, right? So if I'm bearish, or if I'm just looking at the markets, I wake up this morning, the first thing I do is I went on the market, right? I go on the weekly time frame, I draw the fair value gap. I see we tapped into it and we're rejecting from it. I go on the daily, I don't see shit here, right? I don't see shit. There is a bullish fair value gap, but we are also rejecting a bearish weekly. So I don't even look at the daily fair value gap, right? I look at the 4 hour. I see that we tapped into the bearish 4 hour fair value gap and that we are rejecting it. I go on the hourly. I see we disrespected this bullish 1 hour order block, telling us price has no reason to push any higher, right? Until we take out these lows. That is when price will start to reverse on us. I go on the 15 minute. What do I see? Fair value gap respected, fair value gap respected. I'm seeing bearish order flow being respected, and I'm seeing bullish order flow, like this bullish fair value gap, being closed below, being disrespected, right? Like I said earlier, to be bearish, you want to see, where is it? Oh, this is crazy. Why is it so big? If we are bearish, price respecting high time frame, 1 hour, 4 hour. What did we respect? We respected a weekly fair value gap and a 4 hour bearish fair value gap. You also want to see price disrespect bullish. What did we see? We saw price disrespect a 1 hour bullish fair value gap and a 15-minute bullish fair value gap, giving us more confirmation to go short, right? If I was bullish, I'd want to see the opposite. I want to see price respect a 4 hour bullish fair value gap and then inverse and disrespect a 1 hour bearish fair value gap, right? And then you just scale to lower time frames. So, right, you start on the 4 hour, then you go to the 1 hour. On the 1 hour, you see price disrespecting bullish order flow. On the 15 minute, you see a 15-minute bearish fair value gap. On the 5 minute, what do we see? We see a lot of sell side. We see price is still bullish on the 5 minute. So most of you guys who aren't as experienced could just easily just wait for a bullish 5 minute to get disrespected. I usually execute on the 5 minute, 3 minute, 2 minute, and 1 minute, whichever provides the best entry for me at the time. And today the best entry was at this high because we rejected a bearish 15 minute and then disrespected a bullish 1 minute fair value gap, right? So I entered short. All this sell side was taken. I did not hold all the way. I only held up to here because this is where I had the most conviction to. So yeah, if you guys have any more questions, just a little quick rundown for you guys. For those of you who didn't understand what I was saying, this is how you find your daily bias. Screenshot this, put this shit in your notes. I hope you guys actually understood what I taught today. So this is shit. Oh my god, my thing's like not working. All right, there we go. All right, screenshot this. Right? This is how you find your daily bias. How we utilize time frames is as simple as start on the weekly, go to the daily, go to the 4 hour, 1 hour, 15 minute, 5 minute, 3 minute, 2 minute, 1 minute. You're going to use the 1 hour to the weekly to see what high time frame PD rates are being respected and what high time frame PD rates are being disrespected. So if you see we're respecting a bullish fair value gap on the 4 hour and we just inverse a bearish 1 hour, you can say, oh, we're bullish. And that is a very valid judgment. We're bullish. Now what you want to do, you want to go on the 15 minute and 5 minute and look for price to retrace into some sort of PD array on that time frame. Meaning we tap into a bullish 4 hour, we inverse a bearish 1 hour. Now we create a bullish 15 minute fair value gap. You want to see price retrace into that and then maybe get a 1 minute inversion or 1 minute CISD, a 1 to 3 minute, some sort of confluence. It does not have to be the same one every time. I trade very, discretionally, meaning I don't trade based on one simple mechanical model. Not all my trades are inversions. Not all my trades are CISDs. I will trade off what the market provides me. All right. You have to play with what the market gives you. The market will change every day and it is your job to adapt to it. All right. So I'll see you boys tomorrow and I hope you learned something new today. Peace out, boys.